Fun Launch Live, get on your feet, put your hands together, and help me welcome to the stage, Bridger Pennington!
How we doing, everybody? Hello. Wow, how we doing? How's everybody doing today? Woo! All right. Woo! Good to see all y'all. Good to see you guys. Welcome in. Welcome in. Take your seats. Wow. We made it, huh? Woo! We are here. Anybody ever thrown like a party at your house before or something? And you worry if people are going to show up? You guys came. So anyways, we're here. It's awesome. Welcome to Fun Launch Live. Oh, it's amazing. Backstage, I was tearing up watching that video. It's just amazing. And that video and all the accomplishments of this group, and it's a reflection on us as a group and what we can do and what we can go after and what you guys can do. And I'm blown away. I'm blown away by this, but what we together have built. And I feel like this event feels a little bit like a family reunion sometimes. There's people on Zoom I talk to, a lot of you guys I talk to on Zoom, we meet up, whatever. But it's fun to come back in person from last year to this year and see, what's the update? What are you doing? We raised money. We're doing this fun. It's pretty awesome. It's just remarkable to see what this group has done. So, and we're just getting started, hey? We're only just getting started on this. So give a huge round of applause to you guys for all the stuff this group has done. It is amazing. It's just phenomenal. Now, yes, I have a beard. I saw a quote from Alex Hormozy online. I thought it was pretty good for me. It was this quote right here. It says, "If you're an ugly dude, consider a beard. Leaves half your face to their imagination." So here we are with half my face to your imagination. Which is pretty fun. So we're going to have a great time the next 3 days. I promise to go all out. I'm going to give you our full everything we've got. Does that sound good? We're going to play all out. Now, Devon talked about this a little bit. I'm going to do the same with Devon. We're going to try to keep the energy high in this room. I'm going to do callbacks. I'm going to be asking if you're there, etc. And I'm not doing it for me, just so everyone's aware. So I'll be like, if you're with me, say yes. Okay, that was awesome. That was really good. The reason I do that, just so you're aware, there's some people in this room like, I'll never do that. Psychologists tell us if we show up to an event like this and we just sit there and listen, you remember long-term about 0% of what you listen. If you actually take notes, when you checked in, we gave you notebooks, all that kind of stuff. You take notes, that jumps from 0 to about 3 to 5%. So 3 to 5% is pretty good of long-term memory, what you retain. If you use your body and voice and energy, that number jumps to about 15 to 20%, which you retain long-term. Who's down to get to 15 to 20%? Yeah? Okay, if you're with me, say yes! Okay, so I'm going to do callbacks like that. We're going to do stuff, and it's not just, it is fun to do, but it's more to help you be engaged. Your time is very valuable. It's the most valuable asset we have is time. So I want you to be here present and using the best of your ability for all this. Sound good? Okay, it's going to be a fun 3 days. So I want to talk about a few things. We're going to dive right in. Is that okay? We're just going to dive right in. We got a bunch of fun stuff planned. I've got a fun session here. I want to go deep on funds. I want to share a set of good groundwork. A lot of you guys maybe have heard some of this stuff, but I'm adding a ton of new examples and new things in here to help go from there. Sound good? Now, I love this. I think we romanticize the small business owner a little too much. Who owns a small business? Yeah? A lot of people in this room. Now, I'm all for small business. You hear about in the politics news, we're trying to protect small business owners, etc. I think we romanticize it a little too much. Meaning, like being a small business owner in itself is awesome, but it's a step to another further thing, if that makes sense. Steven Schwartzman, co-founder of Blackstone, said this. So $400 billion. Anybody know Blackstone in here? Huge group, right? We're going to talk about a few examples from Blackstone. In his book, he talks about this. He goes, it's just as hard to run a small business as it is to run a big business. It takes about the same amount of work. It takes everything you got. Can I get an amen on that for my small business owners, right? Amen. It takes everything you got. So he goes, if you're going to be into business, it's going to take everything you got. You might as well go after a business that can be big and make a lot of money and has lots of margin. There's a fantastic book called E-Myth that talks about this. A lot of us small business owners, we wake up, we're in a bakery, we're making the bread. We have to wake up, we do the accounting, we do the marketing. At late night, we stay up, we make sure the numbers, the QuickBooks is done, we do everything, right? And we become slaves to our business. So again, I think we romanticize the small business owner too much. Is that kind of making sense? The idea is not to be a small business owner anymore. It's to be a big business owner, right? And have huge margins, a lot bigger things. So a really interesting book. Anybody heard of this book? 10x is easier than 2x. So I saw this book and I was like, that's kind of a cheesy title, the 10x, thing. Like, oh, you're 10x, just set your goal 10x. And it's like, okay. But I loved his concept in here. So Dan Sullivan goes through, he goes, 10x is easier than 2x was his whole concept. Now in this room, if I asked you, write down ways that you could 2x your business over the next 5 years. Think through, actually, literally think right now. Think of some ways you could 2x your business over the next 5 years. Probably a lot of ways. You could run ads, you could do a marketing, you could do an affiliate program, you could do all this cool stuff. There probably is about 100 things you could come up with, right, to 2x or incrementally increase your business. But he goes, if I told you, what are ways that you could literally 10x your business in the next, let's call it 3 years? How many ideas could you come up with? And most people go from 100 ideas down to 2 or 3. Does that kind of make sense? And actually, I read this and I was like, huh. And it stuck with me. At late night, I was thinking about it. We had it in our board. I was like, guys, we got to stop thinking of it's great. Don't put it away. But these are all incremental gains. We could add an employee here, do this little thing. It's going to incrementally grow our business. But what are the 1 or 2 things that will 10x or literally go from 10 million a year to 100 million a year? That's a big jump. 100 million a year to $1 billion a year. That's a big jump. There's probably only 2 or 3 ways that we could get there. And instead of trying to chase 100 rabbits and catch 100 rabbits at once, you catch 1 or 2 rabbits. Does that kind of make sense? If you're with me, say yes. Okay, so, and he has this quote in here. He goes, achieving 10x growth is actually exponentially easier than keep striving for 2x growth. This is a reason a lot of the small business owners stay small business owners, because they don't set the plans and processes to hit that 10x. Is that kind of making sense? That was a pretty interesting concept that I've stayed with. Now, most businesses today needed significant capital to grow. All these logos on the screen, you go watch their story. The way to get that 10x growth was they needed a lot of capital to grow franchises, to do new products, to do new development, etc. Does that kind of make sense? Capital was a huge piece of leverage. Robert Kiyosaki coined this very well, but this has been taught for centuries in business. There's 4 different types of leverage in business. Different ways that you can use, think about a lever, right? You can leverage your business in different ways. Number 1, so this is in Rich Dad, Poor Dad, but it's across the universe of business. Number 1 is capital. Capital is a huge leverage point of business. Number 2 is people, so human capital. Major lever point. Number 3 is technology, and number 4 is media. So again, think about leverage. Those are the 4 main leverage points of any of us can use in business. Is that kind of making sense? So you can leverage the media. Think about like Ryan Reynolds. Have you seen all these actors that are using alcohol? Just drastically, they're like, all of them now have an alcohol or a brand that they're taking and then they exit for $1 billion. You guys seen this? The reason the alcohol company does that is they go find an actor. Let's use media as a leverage point. We'll make this a $1 billion brand. We'll give that person 20% equity. They take 200 million, we take 800 million. They use leverage, they leverage media, technology, people, capital, etc. Does that kind of make sense? If you're with me, say yes. So now, let me go back a little bit. The top one here, capital, I would argue is the most important for the rest of the 3. If you have capital, you can leverage all the other 3. If you don't have capital, you can still leverage them. It just is a lot harder. Does that make sense? If you have like a fund with tons of capital, you can leverage media a lot easier. You can go pay Ryan Reynolds a huge check, right? You can leverage technology. You can buy a big tech stack, whatever you're going to use in your company. You can go hire a whole army of people if you think back to these companies before, that's what they did. They leveraged capital, right? Let's see, go back, to a huge extent to scale their companies. Does that kind of make sense? So the next 3 days, we're going to talk about leveraging this piece the most of capital. So welcome to Fund Launch Live. This may be the most important conference you ever attend for all your business, et cetera, in the future. Sound good? So give your guys a huge round of applause. Welcome to Fund Launch Live. Now, I hope this event is what we like to call an event horizon. An event horizon, in my terminology, is a moment in time. Think about like a peak. You remember everything before that moment and everything after that moment. I'm guessing, think in your life, there's probably a few things in your life that are event horizons. Maybe you met a person, and you remember everything before you met that person and everything after you met that person, but you were a changed person after you met that person. Does that kind of make sense? Or there was a moment or a thing that just changed who you are. I actually want to share one that happened with me and Mason a few years ago. We actually attended an event similar to this one. It was an online marketing one. And here's a picture we got in 2019 with Russell Brunson. Anybody know Russell Brunson? Go Russell, we love Russell, he's awesome. We'll talk about him later today, actually. But this is an event in 2019. We framed out everything at the event. So we attended just like you. We sat down. I was taking notes all day. At night, we go to our hotel room, and we were mapping it out. We were going like, everything we have today at Fun Launch, we mapped out in one way, shape, or form at that 2019 event. It was an event horizon for us. I mean, it changed. I came to that event, and I was a changed person after. I knew after I left those 3 days I was there, I said, I am going to do business differently. I'm going to think differently. I'm going to play bigger. I'm going to have a full different mindset. And I'm hoping something like that can happen here. Backstage, me and Mason were talking about this and this whole story, and I was thinking about this group that was coming today. And we had a sold-out crowd, and it was just amazing. And I thought, I was kind of asking the question, like, who should I base my talk to? Who should I speak to? Should I speak to people that already run existing funds, people that don't run funds yet, people that don't even know what funds are, people the first time here, people that were here last year? Like, who's my direct person I talk to? And we finally came to, I said, I'm going to talk to my 2019 self. I'm going to talk to my younger self. And I'm hoping there's one or two people in this crowd that's like a younger me, whether that's actually by age or by in business or this category or whatever, but can come and say, I'm going to have an event horizon. Everything's going to be different after this event. Does that kind of make sense? Yeah? If you're with me, give me an oorah! All right, so actually following that up, we actually joined Russell's group. It's $150,000 we paid him just because we felt so indebted to him. I was like, Russell, we just thank you so much for this and what you did. We paid $150,000 to join his group. And by the way, I know there's some people in this group like, I would never pay $150,000 for something, right? The way I think about it, it's like, well, if I pay $150,000 and I get back $300,000 or $400,000 or $500,000, I'll pay $150,000 every day of the week. Yeah? Raise your hands. Who else would do that? If I said pay $1 million, but you'll get back $3 million, who's going to take that deal? I'll take it. So the price is obsolete, right? It's more about what am I going to get back? And we want to take Fun Launch to $1 billion company, and he's already done that. So we said, hey, why don't we join here and he can help us do that, right? I'm just going to copy what people do. I'm not a guy that I like to just copy what works. I'll just keep doing it. So Fun Launch Live is going to be a fun 3 days. We're going to have an awesome time with you guys. We got amazing speakers. We have actually hand-selected every single speaker coming to speak for different people that actually, so we have in Black Card, we're going to talk about Black Card, but I meet people all the time that have problems in their business. I have a problem like raising money or this thing with a business partner or something. I don't understand this. We've actually hand-selected all of our speakers to answer different topics, different categories, essentially different concerns that we've heard from this community for the last year. So these aren't just random speakers. Just so you know, I personally hand-selected, called them beforehand, walked them through. We had a very in-depth process. And so I'm so excited for you guys to hear from today. Sound good? Yeah? Okay, now, the next segment here, speaking of Mason, I got on the screen. I actually want to bring Mason to the stage in just a second, okay? So I'm not as good as Devon, but I want to bring him to the stage and have a cool entrance. We're going to do what we call the State of Fund launch. So we did this last year. I thought it was kind of cool. They do the State of the Union address, and it's whatever, a bunch of politics and stuff. We want to do kind of the State of Fund launch. So where we're at, what's the new products we're doing, what's kind of coming out, etc. So in just a second, I'm going to bring Mason to the stage, and we're going to do kind of this State of Fund launch. Sound good? So, are you guys ready? AV team, Mason, you ready? Okay, if you guys can help me, you ready? Get on your feet and welcome to the stage, Mr. Mason Frames!
Step up in this like, I'm the one you like. Yeah, I'm the one you like. And I be talking like.
Get up for Mason, everybody!
I ain't scared to lose the fist fight. And she grabbing like, she wanna see it fit.
All right, man, we're here. Now, just so you guys are aware, me and Mason are 50-50 partners on Fun Launch. I know I'm the face. I'm like on stage and stuff, but Mason is incredible online marketer. The reason you guys are all on your seats, the reason you read emails, everything is all from Mason. All the funnels, everything is built by this guy. So again, huge round of applause for Mason. Unreal. So let's do the State of Fun Launch, yeah? We've done a lot in the last 12 months. We actually were totaling it up, and it's It's a lot of stuff. We actually took out slides, right? That's too much. We just can't go into everything. So first things up, do you want to go through the first one?
Yeah, first order of business. Last year at this event, we were known as Investment Fund Secrets. Really long name, kind of hard to spell, kind of hard to say. So we decided to simplify and make the brand a lot better. So now we are known as Fund Launch. Yeah.
Ka-chow! Cool. Okay. Pretty cool. There we go. You guys like Fund Launch better? Us too. Yeah, Investment Fund Secrets was just a little too much. The email, like bridger@investmentfundsecrets.com,
It's just a doozy.
it was a little much. So we were officially Fund Launch here. Over last year, our student growth has blown up. I think last year on stage we were about 16,000 members total. We got the number here. I know the video is a little outdated. 59,792 members of the Fund Launch community. Give that a huge round of applause for all of you. I mean, that is crazy. I mean, just on this, I don't know if anybody's ever created, like, let's just call it a video or a course before. Like, we started this whole, we'll tell the story in a minute. We started a course on funds. And you kind of hope, like, maybe 50 people will take it. Or 100. Maybe 200 would be really cool. And then it's like, wow, 1,000. And then 10,000 people. And then 50,000 people like, wow, I want to, like, learn this. It's really cool to see what's been done. So anyways, huge kudos. That student growth has been amazing.
Additionally,
Yeah, go ahead.
Black Card has grown a ton. We pour a lot into this year. Since last time we met, we did our Black Card event. Next slide.
Yep.
And we did the race cars at Vegas. It was a really good time. And we added 2 new events since that last time we met. And so since then, we did our Salt Lake City event. Who was at that Salt Lake City event? Cool. In February.
Black Card members. Cool.
So everyone flew out to Salt Lake City. It was great. We did a workshop for 2 days and just dove into everyone's fun. Super nitty gritty. It was a great time. And then last year at Fun Launch Live, we announced our first exotic event. And so in October, everyone came out to Cancun, Mexico. And we had this really nice all-inclusive resort. It was a great time. And how that worked kind of is all day, everyone would come and have fun, go to the beach, eat, drink, zip lines, like you name it. It was a great time. And at nighttime, we would dive into the sessions, have speakers, do workshops, and all that stuff. So it was a really fun time. And we're excited to just keep adding to Black Card. And actually, we have a video for this Cancun event that we can start playing too.
So here's the video. If you get the volume up, that'd be great. Pretty cool. You give a round of applause for that event. It's pretty fun. So we've got 3 events total now for Black Card. We added 2 last year. So we have an exotic event. We're actually announcing the details of the next one tomorrow. So it's like Christmas morning tomorrow. I can't sleep. Anyways, we'll announce that tomorrow. We have the workshop we do. Again, it's more of we go very in depth in your funds, etc. And then we have Fun Launch Live. We have kind of a bonus event we're doing actually Friday. We haven't announced the details yet. We'll announce that tomorrow. We have a fun one in just a couple days. So that's the additions of Black Card. Sound good? Pretty cool. Clap it up for that. Pretty awesome. Additionally, Black Card members, when you checked in, you got this cool piece of merch, which is kind of fun. Now, something Mason's do a little spin for us. Wow, pretty good, hey?
Come on.
Custom made. Now, what's cool about this, and maybe we didn't know how to tell you on whatever, but there's a QR code on the tag. For everyone that got a Black Card shirt, there's a QR on the CAD, and what you do is you scan that QR code, you opt in, and we're doing a giveaway. We're going to give away at the last day. We get invited to a bunch of events. They're usually small, like the Greenwich Economic Forum, World Economic Forum types. They're usually $5,000 to $10,000 a ticket, and it's usually about 100 people are invited. We have 3 tickets to one of these events, about 5,000. So I'm going. Lincoln, who you're going to hear from in a little bit, is going to go, and then also one of you guys. So we're going to have one of our Black Card members. We're going to pick you the last day to come with us. Does that sound good?
Make sure you guys scan that. Make sure you guys opt in because it's going to be a fun time. Might as well.
And if you're not a Black Card member, no stealing the shirts and trying to get the QR code, okay? We'll check the emails. But it should be pretty fun. We'll give that away as well.
Additionally, we added 3 new office hours since last year. We have a compliance hour, we have a Series 65 training, and we added office hours every single day of the week. And so if you guys need help ever, like we're there to answer and help you guys and to answer all your questions. So kind of fun.
Yep. Additionally, last year we had, so in Black Card, you get access to legal work and stuff, and we had, I think, 1 or 2 legal partners. We've added an additional 4 new legal partners this year. So for people that have international funds, people that are doing feeder funds, people that are doing European funds, et cetera, Canadian funds, we have legal teams now that can do all those types of funds for everybody in this audience. Last year, we were pretty much just like domestic funds. Now we can do them all around the world. And we actually, I think, are adding another 2. We don't have them yet, but 2 pending right now as well to have a bunch of different law firms that you guys can use and access inside of Black Card. Sound cool? Clap it up for that. It's pretty good. Pretty awesome. Additionally, just to list off a ton of stuff, we had a ton of things. We have 5 new coaches to Black Card. It's pretty cool. I don't know, are coaches in here? Raise your hands. Where are they at? They might be, I think we have them doing something else. Okay, on the back. Okay, coach, we have 5 new coaches. We've revamped our whole course in phases. We have a full in-house pitch deck designer. We also have new banking partners, since all of them collapsed the last couple months. We had to find some new ones. So we have new marketing partners, and that's kind of the new additions for Black Card. So clap it up for Black Card. Pretty cool. We've been working like crazy on all the new stuff to have for you guys.
Additionally, a lot of people have asked us to partner with them on their fund. And for the longest time, we kind of said no, like, we're not interested. But we finally kind of looked at it, and we realized it could be something pretty cool. And so last year, we launched Black Card Capital Partners, BCCP. Essentially, what we'll do is we'll partner through on your fund, and any need you guys have, anything you need help with, like, we're there to serve and to make this fund work. And so currently, we have 8 people we partnered with on those funds, which is pretty awesome. Anything to add there?
Yeah, the idea is just we'll come help them with whatever. So we're very selective with who we partner with. We'll sit on their board, investment committee. We'll do it depends on each deal is a little bit different, but we actually come in, we select who we want to work with. So we have 8 so far that we've worked with. Lincoln is the one that's really headed that up, done an incredible job. It's been amazing. Primarily our Black Card members, the people that we're partnering with, which is pretty cool because those are amazing funds. We kind of can help each other. We can help them a ton. They have a really cool idea and really cool fund. We can go from there. So clap it up for Black Card Capital Partners. Pretty fun. So we actually want to take you back a little bit. When we first started Fund Launch, we had no idea if anybody would even want to learn about funds. I remember talking to my dad and my brother. They're sitting right here. And we were like, man, I don't know do you think people want to learn about funds or not? Like, does anybody even care about this industry? And evidently they do, okay? So people love to learn about funds. But it's funny, so we'll take you back a little bit. This is actually a picture of me and Mason. I don't know what year this was.
2018, 2019.
Maybe 2018, 2019. We were starting to map out what this would look like on a whiteboard. It's after that event horizon I talked about. And we were here and we decided we wanted to put together kind of a couple videos, a mini course for funds.
And keep in mind, like, there was no audience, no community out, like, it just didn't exist. And so we were kind of taking a shot in the dark, like, hopefully somebody will maybe watch this for $47 or whatever. So we put together this course. We just spent all weekend filming it. We had about $500. We were willing to invest into it. We put the $500 into ads, and just we're going to see what happens. And over the weekend, that $500 turned to about $950 or so, which is, if you guys ever done like a startup business type, like that's pretty awesome. You have at least some customers, and that was the first step. And so we kind of saw that, we're great. So over the next 4 months, we just kept dumping the profits into ads and kept doing that over and over again. And I think over 4 months, there's like 55,000 revenue. It's really small, but we had about 1,000, 1,100 clients, which is great. And eventually, everyone's like, "What's the next thing?" Like,
did any of you guys join that original? It was $47. It was called the Mini Vault. Anybody in here that bought
since
that?
retired, yeah.
Oh, a couple of people. Okay, this is awesome. You guys are like the OGs. That was the first thing we ever launched. We were like, "Well, people maybe like this thing," and we had 1,000 people buy and join the first about 4 months.
Yep.
And so they were like, people were asking us, "Hey, what's the next thing?" And this is us on the whiteboard again after many hours.
So for like 2 months, Bridger went out there and he was interviewing all the top fund managers in the United States. And we're kind of starting to build this really comprehensive course out because that mini vault was really menial. There's like 10 videos in it, so it was really small. And so everyone wanted the next big thing. He filmed and grinded on that. I was in the back trying to just promote this webinar and just kind of build up this hype for it. And because to this point too, like no one's ever really shown their face to us. Like there's a few buyers on the internet, but you don't really have that communication with them, So we promoted this big webinar, and on webinar day, to our surprise, there was like 370 crazy people that decided to show up and attend this webinar, which is pretty excited.
This is a picture. So we brought my dad on, who's going to speak later today, which is pretty cool. Who was here last year who heard my dad speak? Pretty fun. My dad was actually voted best speaker of last year. So he'll be speaking later this afternoon, which is pretty cool. We'll see if I can beat him this year. I'm going to try to beat you this year, okay? But you remember when it was pretty fun. We had a whole vote after. But this is my dad on the original webinar. So we had about, if anybody has thrown a webinar, any type of class, I mean, to get 300 people to show up was a big deal. I mean, we were, at least for us, we were like, this is so cool. Like, we have people on. We get on live, and the webinar software keeps breaking. So we're on, I think it was Webinar Jam or one of those webinar softwares, and it's glitching out. The chat.
They're so engaged. Like, people were spamming every 2 seconds. There's like 100 chats coming in.
We were having people like, type yes in the chat, and then it was like, everything would just break. It was like, and we were like, oh no. And so we're stressing out. I'm like, and I'm behind the camera, like, Mason, what do we do? What do we do? And he's like, I don't know what we do. And then, so Mason, to his genius, he's like, he pulls out his credit card, spends, I don't know how much money, like $1,200.
It's like all the money I had at the time. Yeah,
throws it on a credit card, bought the best Zoom account you can buy. So on Zoom, this is like pre-COVID too. This is before Zoom, but he bought the best Zoom account possible. Thankfully, there was a redirect, like BORT link. We put it in there. We booted everyone from Webinar Jam to Zoom, and Zoom worked phenomenal. And it worked, and everyone, I think we only lost like 20 people maybe.
It's great, yeah.
Which was awesome. It was amazing that people stayed. We did this whole webinar. We launched this little teeny, it was called the Mastermind at the time. Today it's called the Academy. We launched this little course, and it was amazing. I think 76 people joined on that initial launch, which was anybody in the group that joined on the initial one? Curious, anybody's here? We usually have a couple here. There's a couple hands. I see a few over there. Yeah.
Wow.
Pretty cool. Well, thanks you guys for joining that original one. It was amazing. And actually, we're going to talk about awards in a minute. A bunch of our award winners and people that have won 10 or $100 million funds actually were on that original call and joined, which is amazing. They launched successful funds. It was really cool. But we launched it. Anyways, we do this whole webinar. It's awesome. It's going good. And I look behind the camera because it was just a stressful, it was like 2 hours. I look, and this is in my house, and Mason is behind the camera, face down on the ground with his hands like this over his head on the floor. Like, just breathing. And I was like, Mason, we did it. And he's like, I know, we did it. It was just so stressful. So it launched. It was amazing. So kudos to Mason for doing this. This is us, a picture. You can see the stress kind of draining from our face. This is literally right after.
It was at this moment, too, that we kind of started to realize, like, okay, this is something special, and this can actually build something crazy.
Yeah.
Now it's kind of the breakthrough moment for us, which is pretty awesome.
So thank you guys for joining that original one. And we really put everything on the line for that. If that wouldn't have worked, we probably wouldn't be here today, which is pretty cool. So after that, we got shoes to celebrate. As you guys may have known, if you follow our Instagram, so me and Mason love sneakers. We love shoes. We love getting special shoes, etc. And so we got shoes to celebrate. And so we got these original shoes, and we actually signed the bottom of them. If you see like NBA players will do that, like they'll write special stuff about their shoes on there. So we wrote like the launch date, the day we did the webinar, we kind of wrote the little story just as like a memorabilia item on our shelf. And then since then, pretty much every major milestone in our career, business, whatever, we've bought shoes. So I think those ones, which ones are those ones, Mason?
These are the $1 million shoes.
So when we hit $1 million with Fund Launch, Mason bought these shoes, like custom and stuff on the side. I actually just got these shoes for today, which is pretty cool. I was expecting this to go really well, so I pre-bought my shoes this year. But these are like custom. They've got, anyways, our logo and stuff on them. I have a shoe designer that makes these shoes, which is pretty cool. So it's kind of fun. So we love getting shoes. It was a cool way to like have a moment, like something you celebrate. Because in business, it's typically pretty boring. You like make some money, and what do?
Go to dinner.
Woohoo! Like, what do? You like, okay, we'll go party tonight. Like, what do you do? Like, there's not like this award or trophy or something to like. We love playing sports growing up, and it was just cool to like have your hand raised, like get a championship or something. So we decided to make something for this group in the fund space. Some of you guys may have seen this before. So we launched last year. This is called the Wall Street Rebel Award for any fund over $10 million. And actually, last year we had a bunch of award winners come on stage. And you saw on the screen we have a bunch of new awards. So actually, Mason, do you want to? Let's grab these real quick. So any fund over 10 million AUM, these are a custom pair of sneakers, custom to you. So right here, yeah, here they are. They're all one-of-ones. They're unique.
Carbon fiber. They're custom painted. Your logo and stuff goes on them. It's pretty cool.
So they have your name right here. You can't probably see it from the camera, but your name's right here. Yeah, we can add different stuff for your sneakers. What you can do is go put it on the shelf, etc. You want to grab the box too. It comes in a custom box with like engraven your name. It comes with a nameplate, like it's an actual like trophy thing. And actually, over the last year, we've made it even better and better. We'll let Mason bring this over. It's got QVC right now. Doesn't it feel like QVC? Doing a little online shopping. Here we go. Our next item. So this is the box. It's got engraven. You can put your name on it, everything right here. So it's kind of an award. Something you can put on your shelf. Like, dude, we did this, which is awesome. Does that sound kind of cool? Who would love to get something like that on your shelf? Yeah, we think kind of cool. So this year we have a bunch of award winners. Now we have different people at different stages. So we actually launched a new award this year. I don't think anybody's seen this. So we have a lot of funds over $1 million. So this is the $1 million Wall Street Rebel Award. So tomorrow on stage, we're having an award ceremony. You guys can get one of these if you have over $1 million in your fund to kind of celebrate the milestone. So you'll come up on stage, you'll be right here with Mason and me, get a picture and be on stage, etc. It's kind of the winner.
It's kind of the teaser for the big dogs too.
Yeah.
So
Which is pretty fun. And then we also have the $100 million award. So this is, I think Mason's got over here too.
24 karat gold on the paints. That's pretty nice.
Yeah, the paint actually is 24 karat gold paint, which is awesome. They're custom made to you. You got your name on the back.
Jordan 1s, which is like the most legendary shoe ever. So yeah, kind of fun.
Kind of fun. And we can customize them to you. So I think this year we have 51 $1 million award winners in the audience right now with us. Clap it up for that, which is pretty cool. We have 39 $10 million award winners. So you can clap it up for that as well. I guess we can do it at the end. And we also have 12 $100 million award winners sitting in this room right now, which is pretty cool. Okay?
That we know of.
Now, that we know of. So actually, we kind of, this is a new award. We launched stuff on emails and stuff. If you're in the audience right now, we weren't going to do this. We decided to do it. We had a couple people say they were winners. If you're in the audience, we're doing the award show tomorrow. At the end of this session or whatever, during breaks, go to the back of the room and fill out the little thing. You have to prove that you have this. Like, think about we're in the court of law and you needed to prove that you had $1 million AUM in your fund. But we would love to have you on stage. And what we'll do is probably 2 weeks or 3 weeks from now, we'll make you a custom pair of shoes and we'll send it to you. Does that sound good? So end of the session, back of the room is where our team is at. All in the back right there, that's where you go. Does that sound good? Okay, pretty cool. Additionally, that's our awards. This is kind of cool. I don't think we've shared this with anybody, which is kind of fun. You guys ready? We've had a lot of our members struggling with investor backend portal, listing their fund on the website or portal. So like doing like a website building, KYC, AML checks, uploading and sending docs efficiently. So we thought it'd be cool if we fixed all of that. Ooh, drum roll please, everybody. Okay, this is the Fund Launch Marketplace. Okay, we've been in beta test with our Black Card members the last few months. We've had a few members on there. So what the Fund Launch Marketplace is this right here. So you can see some screenshots. These are actually live right now, marketplace.fundlaunch.com. You can come list your fund. Investors can come see it. They can see the full offering docs. They can see a video on your fund. They can see the pitch deck, PPM, LPA. They can actually invest through the portal. It does capital calls. It does KYC, AML, all the stuff all in one kind of hub. Now, these are funds. The funds listed right here are 506Cs, so they can publicly advertise. We also have 506Bs. They're just hidden. We have, I don't know how many. We have a dozen or so hidden ones that you can just send directly to your investors, essentially as your website or landing page. You can collect emails, build a list, etc. Does that kind of make sense? If you're with me, say yes. Okay, you guys are there. This is actually an example. I put my fund on there. So I run a crypto fund, Ugly Unicorn Crypto Fund, which actually we've been killing it. It's been so awesome. We've been doing really well. So you can come on here. You can kind of see down. We have a full video of us presenting the fund. So an investor can come and just watch and see what we're doing. Here's our pitch deck all down here. We have our team slide, etc. We have all of our documents. They can download our pitch deck. They can look through our documents, and you can make them if you want. You can add verifications. They have to verify their net worth before they get your stuff. You can add whatever blockers you want so people don't steal your docs. All right, there. Here you can come and you can actually type in, hey, I want to invest $100,000. You can type in, it actually does the KYC and AML on the platform. You can integrate with DocuSign to send the documents directly to your investor. They sign the docs, fill them out, and they are subscribed in your fund. Pretty cool. Yeah? Isn't that kind of awesome? Okay, there's the Fund Launch Marketplace. So again, full website, opt-in page, KYC, AML, DocuSign integration, investor backend portal, and links also to your third-party admin. So if you have a third-party administrator, you can actually link and upload documents here back and forth. So even if you have an existing fund, you could use this to just do, marketing or advertising, whatever you want to do on there. Kind of cool, okay? So when is this available? The big question, right? When does this come out, etc.? So this is available today for all of our Black Card members, which is kind of cool. So go Black Card, it's pretty awesome. We're going to continue to beta test this with our Black Card members. And then the plan is it's available to everyone over the next 6 to 8 months. We're going to start rolling this out. What we're going to do is selectively pull funds and put them on the platform and go from there. Pretty cool. So clap it up for the Fund Launch Marketplace. Pretty awesome. All right. I know we had a lot of stuff. You guys still with us? Still like this? Okay. Additionally,
Additionally, we have our whole value ladder here up on the screen, and a few of those products are pretty new. You probably see up there the Whale Group and the Black Card Capital Partners. And so let's talk about Whale Group for a second. Last year, we had a lot of members who started to get really successful, and they got the thing, like the point of Black Card is to get your fund launched, you did $10 million. And so once they did that, they're like, what's the next step? And we're kind of sitting there thinking, and the next step is probably to join a higher level group that is more about just leverage, a few tricks here and there, like things that just make the needle move a lot faster. You don't really need like legal startup and all those things anymore. And so we decided to launch Whale Group, which is what this event is. And we had our first one back in February. We had everyone helicopter into this private cabin in Utah. We had a private chef. And for 3 days, we kind of just had a blast. So that was the first event in Salt Lake City. And we actually have a video for it too, if you want to show it.
Yeah, and last night we went to dinner with our Whale Group members as well. So it's a small group, tight knit. You have to have a $10 million fund to even apply to join. So it's all active fund managers, which is kind of cool. So yeah, we'll cue a video if you guys want to dim the lights and get the volume up. There's Whale Group, everybody. Pretty fun. So just so everyone's aware, Whale Group, it's $75,000 a year to join 20 members. We have about 14 that have joined, so I think we have 6 spots open. So during this event, if you want to come talk to us in the back of the room about Whale Group, etc., our next event is going to be an Alaska fishing trip. We're going in July. We're going to go river fishing in Alaska, which is pretty fun. It's pretty cool. Those helicopters, by the way, one of them, anyways. We're not doing helicopters again, I don't think. It was really cool to have helicopters.
One of the doors flew off, and
literally on the way home, the windstorm picked up, and like the door ripped open, and like they had to do an emergency landing on the highway.
It's part of the experience. Right?
It was all planned. We're not doing helicopters again, but it was cool to have helicopters. We had 2 helicopters, anyways. Yeah, we're not doing that. Okay, last thing, and then we'll keep moving here. There is, we believe, a massive move towards tokenization of assets and funds, we believe, happening right now. Wayne Gretzky talks about, don't skate where the puck is, skate where the puck is going. So we believe where the puck is moving right now, and again, we don't know when or how quickly regulatory bodies, but we believe tokenization of assets and funds will be the next thing. And so we're actually working very hard on kind of getting ahead of that. So just so you guys are aware what that means even, last year, you guys know the Denver Broncos sold to the Walmart family, the Waldens. There was another bid. It came from a DAO, a decentralized autonomous organization. So similar to this, what happened was, just for an example, let's say 10,000 people put money in together. I don't know if they raised, let's call it like $3 billion. They went and actually bid on the Denver Broncos, had a competing bid. Now, they didn't go with them, but imagine if they did choose that. You'd have a fractionalized NFL team. And if you were one of those 10,000 holders,
vote for trading players. You can.
Yeah, we want to trade the quarterback. We all just do a vote, and 50% say yes. Yeah, that guy's traded. That'd be kind of cool as a fan. Isn't that a cool idea? And I mean,
I want a part of that.
Mr. Unlimited, right? Get him out of there. So that's the idea of tokenization of assets. Additionally, you could sell your position. So if you had one of those 10,000 spots, you can sell it on the secondary market. You can bid it up or down. So some of these have been happening with like real estate, for example. They fractionalize, let's say this building, you fractionalize ownership into 100,000 pieces, and any of us can come just buy a piece of it. You also have smart contracts that allow you to do distributions effectively. So if this building produced rent, you could just have a rental distribution. It goes to anyone that holds that contract, gets an instant distribution. That's the idea. And we've kind of coined this phrase called smart funds. So something that we call smart funds that we are going after heavily right now. We wanted to actually do a full demo for you guys on stage. Our dev team is so close to get us all ready for you guys to launch with SVBs, with funds, etc., which is pretty cool. So smart funds is coming out very soon. What it'll allow you to do to have fractionalized ownership, secondary markets to sell positions. The whole fund is ran through smart contracts, and then distributions payouts are all run through what we call smart funds. Is that kind of cool? Now, we're still waiting for SEC updates and IRS. They're continually updating this industry, so we'll continue to work with them. That's why, again, we're skating to where the puck is going. They've been a little, anyways, wishy-washy or not blind, but slow to get to this asset class, but we'll see where we're going to be at.
And the fund world's pretty traditional, pretty old-fashioned, so we hope to be the ones on the forefront of the next era of that. And so that's kind of the vision. And we have the whole community to do it with. So pretty fun.
Yeah, we got this whole group, which is kind of fun. Okay, so give it up for smart funds. Pretty cool, okay? That'll be coming out in the near future. We're working on like crazy right now. Okay, kind of fun. That's the State of Fun launch. Yeah, we're doing okay. Yeah, and then we're just getting bigger and better every single year, which is pretty cool to see everybody. So, with that, thank you guys. If you guys can give a huge round of applause to Mason Brains, everybody. Awesome. Thank you, Mason. All right. Now let's talk about funds, yeah? Ready to get into it? I'm going to talk fast. I'm going to go quick. So take some notes. We're going to fly through this. Sound good? You guys with me? Say yes. Actually, if you can, stand up for me. Just stretch out for a second. I know we're going to be here for a sec. Stretch it out. If you can, high five the person next to you. Say what's up. Say you're awesome. I love it. All right. Thank you very much. Take your seats. Let's dive in. Here we go. Again, family reunion. I love it. I see people like hug and saying what's up. Okay, so real quick, just background on me. I know some of you guys don't even know who I am. My name is Pennington. This is actually a picture of my dad and my brother right here. They're sitting both front row, which is amazing. We'll tell their whole story in a little bit. My brother is an investment funds attorney, just so everyone's aware. So worked at the largest law firm in the world, has done multiple huge deals on funds, multi-billion-dollar funds. My dad co-founded a deca-billion-dollar family of funds. You guys will hear from him tonight. We've got a pretty interesting family dynamic. None of us went to Ivy League schools. None of us went to Harvard, et cetera. None of us worked on Wall Street. And really how this whole group came about was, we kept talking, like, I think more people would want to learn about this. We had people coming and asking my dad or my brother, like, how'd you guys do funds? How'd you launch them? And I'll tell the story in just a minute, but it's pretty cool. And we have some fun family dinner conversations. And, every time we get together, we're talking funds and finance and all this kind of stuff that you guys are going to hear. So we wanted, essentially this event is built around, a lot of people said, well, Bridger, you're so lucky. You had an amazing dad and brother and et cetera. I wish I had that. And guess what? Now you do. Because we have this event. You're here. Like, this is what we're doing, is give you an extension of that. Does that kind of make sense? Okay? So, which is pretty fun. Now, we're going to dive into this. My goal for the next 3 days is to convince you of this. A fund is the best way for you to scale your business or investments. All right? The goal for the next 3 days is I'm going to show you how to build an investment fund without, number 1, a track record, 2, working on Wall Street, 3, a fancy degree, and why you should launch a fund or syndication to scale your business or investments. Talk about that first piece of leverage, right? Capital, how to do that. If you're with me, say yes. Does that sound good for the next couple of days? Also, I want you to feel totally confident in the next 12 months that you can come up here and win on stage a pair of shoes running a $10 million fund. I want you to feel confident that you can do that and be up here next year and set that goal in your brain, like, I'm going to be there. And it's cool for people, a bunch of people from last year, like, dude, I did it. The last 12 months we're here, and they're going to be up on stage tomorrow getting their awards, okay? I want you to be there. Now, a fund is the best way for you to scale your business investment. So dive into funds. We're going to start very basic, and we're going to go advanced pretty quickly. Does that sound good? Okay? I know a lot of you guys have probably heard this, but we're going to go, I promise, we got some new stuff for y'all. Sound good? So what is a fund for people brand new? Actually, first off, this is your first time to Fund Launch Live? I know Devon did it, but I want to see it just for me. Oh, awesome, man. A lot of people. Okay, this is great. So you guys, welcome in. It's going to be awesome. So what is a fund? We're going to talk way basic. Fund Launch Live, fund launch. Like, what even is a fund? What are we even talking about? All a fund is a pool of money. Investors put money into that pool. People like me and you can draw from that pool. We can go make investments. We go buy assets. We'll share a few examples in a minute. Whenever those assets make money, they flow back to the pool and get split between ourselves and the investors. That's it. Okay? It's not that crazy. Think about like back in the day, like a blacksmith shop. Like in the Middle Ages, hey, we're going to open up a blacksmith shop. I want to get some money. Put some money in. Whenever the blacksmith shop makes money, we'll just split the returns. That's all really a fund is. In the most basic sense. Does that kind of make sense? It's not that crazy. So if you've ever heard of private equity, hedge funds, real estate funds, debt funds, credit funds, they're all funds. We actually helped a lot of people launch these types of funds in our community. So what's the difference then between all of these? So I'll start with the middle one, real estate funds. It's in the name. A real estate fund is a pool of money, and they go and buy real estate. When the real estate makes money, it flows back to the pool, and then we split that with ourselves and our investors. It's not that crazy, right? Private equity fund. A private equity fund is a pool of money. Instead of buying real estate, they buy privately held businesses. So they buy a bunch of coffee shops in a region. They go buy a bunch of, I'll actually share a few examples, a bunch of retailers in a certain region. They group them together, group businesses together, and then whenever those businesses make money, they split the returns. That's privately held businesses. Hedge funds. Those ones are doing public businesses, typically public securities, stocks, bonds, options, Forex. Those are publicly held securities, okay? That's all a fund is. It's not that crazy. Whenever you hear on the news like this hedge fund manager, private equity, and a lot of us, finance, I hate the world of finance because they make these terms so confusing for people to understand. It's really not that complex. They're all structured almost exactly the same. We launched 130 funds last year in all these different categories. Is that making sense? If you're with me, say yes. So a few examples. So The Big Short, anybody seen this movie? Awesome movie, really fun. All these fund managers, the reason they could short the housing market in 2006, 2007 is because they had a fund behind them. You ever wonder, like, man, I wish if I could go back in time, I would have shorted the housing market. Well, the reason they were able to do that is because they had a massive fund behind them. Does that kind of make sense? The reason people can take advantage, and we're going to talk about economic right now, we're in interesting economic times. We have a bunch of speakers talking about that. The reason they can take advantage of those things is because they have a fund. Okay? A great example of this, a private equity firm. Anybody know Sycamore Partners? Okay, Sycamore Partners. Well, I usually ask this, like, nobody raised their hand. I'm like, have you heard of any of these brands? Did you know they're all owned by the same private equity fund? Kind of crazy. All those brands are owned by the same group. Sycamore Partners on Wall Street manage about $12 billion. That's the world of private equity. Blackstone Private Equity, $131 billion. They own all of these brands. Kind of crazy. Like, a lot of people don't know. These companies, they're owned by the same individuals. Actually, I was looking at Blackstone as well. I went on their website. So they manage, right here, $577 billion total AUM, which is just phenomenal amount of AUM. I was just trying to put it into perspective of how much they control and own. And I was looking on their website, and they had this picture there. And I was like, like, do they own, like, what do they own? Like, they own one of those buildings or the one on the corner? Like, what do they own? No, they own the whole thing. That, in downtown Manhattan. They own 11,000 units, 56 buildings in Manhattan. And I was like, oh, they own that. They had to rent a helicopter to just get a picture of their asset. This is the world of funds. You need to understand this game. I mean, it's the biggest game on earth right here. Blackstone as well. Did you know they owned MGM Grand? Now, I know they just exited this, but as of a few months ago, they owned MGM Grand. You guys know that? Oh, and they also owned Mandalay Bay. Oh, and did you know they also own the Cosmopolitan? So you're thinking I'll never gamble at the MGM. I'm going to the Cosmo. You're going to the same people. It's the same people that own all of them. Okay? They're like, okay, go to the Cosmo. We'd love for you to go to the Cosmo. Okay? They own all of them. This is the world of funds. Okay? These are lists right here. I've done this before for groups, but these are all hedge fund managers right here. And there's some huge numbers next to their name. You have 4.1 billion, 3.2 billion. Now, let's talk about net worths for a second. A net worth, like Elon Musk's net worth, I think this year has dropped like crazy. It goes up, it goes down because his net worth is based on how many shares of Tesla he owns. For example, if their stock price goes up, his net worth goes up, it goes down, etc. Does that make sense? That's how a net worth works typically when they report it. These are not net worths on the screen. Okay? This is their 2022 earnings alone, just from one income source. This is not personal investments. This is not their other portfolio. This is their hedge fund produced Ken Griffin $4.1 billion last year. Pretty wild. To put it in perspective, here's a question. Actually, I'm curious if anybody has the answer. You might. If I gave out, or you gave out $76,000 a day, every day, wouldn't that be kind of fun? $76,000 a day, every day to somebody, you find someone new on the street, you give them $76,000. How many days or months or years would it take you to hit $1 billion? Anybody know? Shout it out. A year? Okay, shout it again. Who else? 4 years? $76,000 a day. How long till you hit $1 billion? 31 years. 31 years. It's about 31 and a half. You'd hit $1 billion. When people talk about $1 billion, my dad did this last year. If you talk about $1 billion's a lot of money. Imagine if you're anybody 31 years old in here? Right here, a couple people, 31 years old. You gave away $76,000 every day your entire life till this point. That would only be $1 billion. Ken Griffin made $4.1 billion last year from one income source. Talk about another world of wealth, right? When I talk about a fund, you need to launch a fund. You need to understand this game of funds. It's the biggest, baddest game in the world. That's why we're here. Yeah? Isn't that kind of cool? Who's with me? Say yes. All right. I'm sick of Wall Street elites controlling everything. We need more of us. That's why we do this. We need more of us cracking into this industry. I'm sick of this only being reserved for the Ken Griffins. And by the way, Ken Griffin's awesome. Nothing wrong about Ken Griffin, but the Ken Griffins of the world just controlling everything. People like us need to understand this game. There's a reason we call ourselves the Wall Street Rebels. Wall Street Rebels, people. Ow! There's a reason we call ourselves the Wall Street Rebels, because we need to understand this game. And guess what the game they play? It's just the game of funds. Those people that own those other businesses, all they did, guess what? 20 years ago, 30 years ago, and we're going to share all their stories. I've studied all their stories, etc. They just started a fund. And they got it bigger, and they got a little bit bigger, and just got bigger, and they used this vehicle of funds to do incredible things. Is that kind of making sense? That's why I believe everyone in this room should be considering launching a fund, if not syndication, like right now. Especially, we're talking about 2023 and timing, etc., especially right now. Last year, the message was, I want to start a fund. This year, it's like, I need to start a fund. And we'll talk about it more tomorrow, but it's an incredible time to be in this game. Yeah? If you're with me, say yes. Okay? We're the Wall Street Rebels. That's why we put on our shirts, our brand, etc. We need more of us to take over and decentralize this industry, essentially, is what I believe, okay? Now, who this works for? This works for people trading, for people in crypto, Forex, futures. Actually, where are you at? Where's my traders? Who's a trader in here? Raise your hands. Let me come out. Actually, I want to see some people. Keep your hands raised. Traders, where are you guys at? Make some noise, traders. Hey, there they are. Good to see all my traders. We got Jay the trader right here. Okay, I love it. Where's my real estate people? Make some noise. Hey, a lot of real estate people. There you go. A little bit happier than the hedge fund people. It's been a tough year in the public markets. Buying and smuggling small businesses. Any of my private equity business, make some noise. Oh, okay, awesome. I love it. What's our next one here? Investing in startup, VC, startup, seed capital. Make some noise. Okay, there you guys are as well. Sorry, I got to keep looking. Okay, who's kind of a late stage private equity? You scale existing businesses, raise a hand. Anybody? Make some noise. Okay, there they are. And then finally, issuing loans. Where's my debt people? Who's doing debt? Make some noise, debt people. There they are. I love it. And then just undecided. Who's here to just learn? Raise a hand. Yeah, make some noise for people just coming. Hey, that's awesome. I'm all about that. I love people. If you have no clue about this industry, this is the perfect spot to be. Come here. And that's why we're starting simple, basic. We'll go advanced. We'll go the whole time. Sound good? Yeah, I love it. Now, a lot of us make excuses not to start a fund. I know in your brain, in my brain, I'm too busy. I don't have the right financials. I don't have the right pedigree. I don't have the right X, Y, Z. A lot of us have this kind of stuff, yeah? Now, last year I mentioned there is one person that has shattered all glass ceilings for me. Do you guys remember who it was from last year? Anybody remember? Shout it out. You remember? They shattered all, this one is a guy. He shattered all expectations for me in the world. It's a glass ceiling that if he could do it, I could do it. Pete Davidson. This guy is amazing. The fact that he can date Kim Kardashian means we can do anything. Okay? All right? Say, I can do anything. If this, and I found a topless picture of Pete Davidson just so you could just see how sexy he is of a dude. If he can date Kim Gay, we can do anything. Now, this year though, I found someone new. I found someone new that's really broken through glass things for me. You guys want to know who it is? There's someone new I'm like, if he can do it, I can do it. I love doing that. If he can do it, I can do it. The fact that Joe Biden is president right now. The fact that he has dementia, I don't know, right? Now, there's about 30% of this room that's like, that was bad. So, to help the other 30%, the fact that this guy was president means we can do anything in this world, okay? Clap it up for that. You can do anything, okay? The fact that these two gentlemen are our last two presidents means me and you the sky is the limit, okay? And the crazier fact is they are both the front runners for the next election which I can't even, if anybody's a political person here, please, let's shake it up. Just shake it up. That's all I can ask for. Let's shake it up. I'll vote for both parties. I don't care. I'm not either way. Let's just shake it up. Sound good? Okay, but if they can do it, we can do this, all right? Now, again, a fund is the best way for you to scale your business or investments, all right? Now, I want to go deep. If you guys want to get your pens, I'm going to go fast through some examples. I want to share a bunch of examples, give you ideas of different types of funds people are doing. So where's my real estate people again? There they are. I love it. I'm going to share an example of how one of our, people in our group went from flipping. Any house flippers in here that do? I'm sure a lot of you guys have flipped a house or changed houses. He flipped 3 to 4 houses a year. Next year, flipped 70 houses. I want to share exactly his example. Sound good? So this is what he did. I'm going to summarize, you house flippers. I'm going to summarize your entire job in about 30 seconds. Okay? Here we go. You guys find a house. Looks awesome. Let's fix it up. We then go and we got to get money for it. So we get hard money, investor money, bank money, or your own money. We get that money together. We put it into an LLC. We have a little operating agreement. Throw the money in. We then go flip the house. We renovate it, do all the stuff. We then make a little bit of money. Yeah, we're making some money. Okay? Feeling good on the way to the bank. And then we start over. We find a new house. How'd I do, house flippers? Is that pretty good? It's your whole job in 30 seconds. That's a good job. You make actually good money. There's good money in house flipping. So this is what I like to call the syndication loop. And by the way, syndications are awesome. Some people keep asking me, like, Bridger, are you like anti-syndication? No, syndications are amazing. They're great to build your track record. It's a great way to get some deals under your belt, get going. But this gentleman we talked to, Brent, he was like, hey, I want to do the next thing. I want to do more. It's hard to get economies of scale. So we said, hey, what if we set up a fund? So instead of every single deal, you're raising your money, trying to go to the courthouse, calling people Friday afternoon, wire your money in, etc. You set up a fund. You raise the money once. You set up the legal documents once, and you can go flip as many houses as you want over and over and over again. That's what he did. So he set up the fund once, money once, and then, ta-da, he went and flipped 70 plus houses in 1 year. And also, he had economies of scale. So think about this. Do you think you'd win more deals or less deals if you had a fund ready to go versus like syndicating trying to get money in the fund? More deals or less deals? More, right? Do you think you'd get better financing or worse financing from banks with a fund? Better or worse? Probably better, right? Because you have a relationship, you're doing more deals, you have more capital, you can probably get better interest rates. So all of a sudden, ta-da, he now can do more deals cheaper, and he has economies of scale. He can hire multiple crews that go from house to house, and he has economies of scale, which makes all costs go down. Pretty cool, right? Houseflippers, is that kind of making sense, that example? Love it. If you're with me, say yes. Okay, how this works with businesses. This is actually a true example. This guy calls me. He has a gun store that does $10 million a year, roughly, okay? Selling guns. He's like, Bridger, I want to scale. So what's my options? And typically we think the options to scale a business are, we call up like Kevin O'Leary types. Hey, I'll give up 20% of my business, put money in, and then we'll go scale. Or I'll get some debt. So I'm going to go to the bank. I'll get like an SBA loan or a debt loan, etc. And that's how we're going to do it. We have a bunch of debt on the business. It's typically what people think of. And I said, hey, there might be a third option. You want to hear what it is? It's called a fund. So this is what we're setting up for him actually right now. So he has a gun store. You set up an outside fund. See how I separated those? So outside fund, you raise outside capital for this fund. That fund comes in and buys the competitor stores because he wants to go and buy up all of his competitors in a certain region. So you use that fund, you go buy your competitors' stores, and then, hey, guess what? You're pretty good at running gun stores, right? Let's contract you out. Let's pay you a 5% corporate fee to come run the gun stores for us. And you can put your branding, your logos, etc. That's what the fund will pay to have you do all this. So ta-da, the fund goes and buys, let's call it 6 or 7 competitor stores. They contract his existing store. They pay maybe a 5% corporate fee to do that. He now can put his branding and logos on all the competitor stores and essentially controls them. And now he has a monopoly in a whole region of stores. Kind of interesting, right? Now, when those stores make money, the money, he pays a 5% corporate fee back to his existing business. It goes back to the fund, and they split, let's just call it 80-20 on the returns. And he's also an owner on the fund. So he makes a 20% split there. He also gets the 5% fee there. Is that kind of making sense? You guys following along? Pretty interesting, right? You can do this with businesses. It's kind of funny. If you're with me, say yes. Okay, chiropractor shops. We have a couple people that we've actually met that are doing this. They found they can group chiropractor shops together and sell them for a multiple. It's called a roll-up. If you've heard of dental roll-ups where they're buying dental practices together, this is kind of a similar thing. So for example, this person has a fund. They go buy, let's call it 8 chiropractic stores. They put them together. They then package them. They get all their overhead down. They get their marketing expense down because they have, again, economies of scale. We'll talk about that in a minute. Ta-da, let's say they buy them for $8 million, $1 million for a piece. They can turn around and sell them. It takes about 12 to 18 months. They sell them for $12 million. Pretty good. $4 million gain. They split it, let's just say 80-20, $3.2 million to investors, $80,000 net take home to him. Not bad. Who would like to make $800,000 doing that? Am I the only one? Yeah? Okay. That sounds pretty, I'm like, yeah, that doesn't sound that crazy. Buy 8 stores, group them together, sell them in a year to, make that much money. It's pretty cool. Another example, I'm going to go quick through these. This is like, imagine a small diner. This is actually Arshall's in Beaver. I love Beaver. Anybody been to Beaver, Utah? Make some noise for Beaver, Utah! Woo! It is like the pit stop I live in Salt Lake City, between Salt Lake City and Vegas. You always stop in Beaver because it's just located perfectly for your gas tank. So it's like made for just gas stations, the whole town. But there's this little spot called Arshall's. It's got amazing stuff. I actually have a friend that comes in and buys these. So what you would do is you find that local town, they've got the best pies and there's only one location, right? So you come in, you say, hey, why don't we scale you? So you come in with a fund, come buy up Arshall's, and then say, hey, we're not going to be one location. We're going to turn you into 10, 20, 30, 50 locations, etc. Again, we'll just split the returns with you as the owners, and we'll go from there. Does that kind of make sense? There's actually a group in Utah called Mercado Partners. Andrew Smith, he's been on some of you guys seen us, we did a whole episode together. They do this. Anybody heard of Mobetta's? Anybody eaten Mobetta's before? Awesome restaurant in the Western United States. They found Mobetta's when it was like 2 locations. And now I don't know, let's just call them 100 plus locations. They found Swig when they were a small location. They have a bunch of brands. They essentially go to small towns, find the best food in that little small town or that location. They take them and they blow them up like crazy. They're about a $400 million fund right now that does this private equity. Kind of cool. Pretty interesting model, right? Now, Bridger, how else does this work? How does this work in e-commerce? Is this okay, by the way? You guys like these examples? Is this okay? Keep going. I think it's cool to just share different examples of how this works in real life. And I hope you guys can take notes and think through this could work for me. How this works in e-commerce. This is actually a group in Black Card. They raised $250,000. They went out, and I'm going to use rough numbers here, but let's just say roughly $250,000. They go and buy 5 Amazon stores for $50,000 a piece. Okay, $50,000, $50,000, $50,000 all the way across the board. They group them together. They are good at scaling Amazon businesses. So they group them together, etc. In a year, those 5 stores, and net free cash flow. Let's see my clicker here. $350,000 net free cash flow. So what they do is they actually take the money and return it all back to their investors, plus a 40% return in 1 year. So investors love it, but they don't sell the assets. They still own all 5 of those stores, which is about a $3.5 million enterprise value that they now free and clear own because they purchased them. A lot of us think I got to be the next Mark Zuckerberg. I got to think of this business. I got to start it. I got to scale it. When in reality, a lot of us can go buy existing businesses and even boring businesses, vending machines, laundromats, Amazon stores, and make a really good amount of money doing that. Does that kind of make sense? If you're with me, say yes. Okay? Now you might be asking, how are they getting those stores so cheap? Typically, these people that run Amazon stores, they'll find someone who's 23 years old and just starting out. And, hey, you want 50 grand for your store? Dude, 50 grand I want 50 grand. That sounds amazing. I'll take the store. And I exited my business for 50 grand. They can scoop up some really cheap e-commerce assets because that market's not very efficient. There's not a ton of big players there. So they found that they can come in and find these really good deals. That kind of makes sense? Pretty cool, okay? Now, how this works in stocks, my hedge fund people, how does this work in your space? Typically, we can talk about hedge fund incubators. You guys can start a small fund, but typically, you're trading your own money, let's call it, or maybe friends and family, they're sending Venmos or wires. All it allows you to do, a fund, allows you to just do more money, yeah? So if you're trading $1 million, you can now trade 10 million or 20 million. You can do bigger contracts, etc., get better deals, yeah? Sound good? All right, make a little noise for that. Pretty cool, kind of awesome, right? Make a little noise. All right, let's go a little bit deeper onto fund structure. Hope this is okay. I want to set a bunch of groundworks, a bunch of frameworks, etc. So let's talk about funds. The next structure I'm going to show you is how 99% of the world's private money is raised, okay? I want to show you the actual structure of how these funds are built. So we talked about what is a fund. We have ourselves, our investors, our assets. They just have different names in the fund world, okay? So these names are, instead of a pool of money, it's called a limited partnership. So a limited partnership, this is, again, 99%. I know there's different nuances, but this is how 99% of all funds in the world are structured. So limited partnership, which is your pool of money. You have a general partner, which is like me and you. That's the fund managers. We also sometimes have a management company. So this is us on the left here is us. We manage the limited partnership, just here, that goes and makes investments, all right? And we have investors that put money into the limited partnership. They're not called investors, though. They're called limited partners. Okay, so limited partners put money or capital into a limited partnership, which is managed by a general partner and a management company. Does that sound good? That makes sense so far? Now, this is all governed by what we call the Bible. This is called an LPA and PPM agreement. They are thick. John writes these, my brother. They are massive. They're like 100 pages each. They're huge. We call them the Bible. The reason they're called the Bible is they control all the laws, covenants, bylaws of your fund. Okay? So now, the cool thing about funds is you get to write the Bible. One of the biggest questions I get is, Bridger, can my fund do this? Or can my fund do that? Well, typically, the answer is yes. It just needs to be written in your Bible. Okay, so if it's in your Bible, then you can go and do it, if that kind of makes sense. Okay, if you're with me, say yes. So if you'll hear on, like, people will talk about, oh, my LPs are putting money in. What they mean is your limited partners. My LPs, that's their investors. My LPs are throwing money into my GP and my LP. My LPs are throwing money, and that's what they mean. They're talking about this general partner, limited partnership structure. Once you learn this, you'll start hearing on the news, you'll hear on podcasts, etc. You'll start hearing this around the space. Does that sound good? Now, Bridger, how did you learn all this? Yes, cool if I tell a little story here real quick. So this is actually, my dad's going to speak later today, but I actually grew up in this house right here. This is a picture of the house I grew up in, and we moved like a mile away. My dad drove this car. It was a 1999 Ford Expedition. And my dad was just an entrepreneur, really. Started a bunch of it. He'll tell you later today, so I don't want to ruin his thunder, but started a bunch of cool businesses and stuff, but it was up and down, etc. And I was very ambitious. I got into college, and I was like, I want to be an entrepreneur. I want to, like, do business because that's where people make money. So I was super ambitious. I got into college. I started 6 different businesses. I'm going to come down here and look at you guys for a sec. 6 different businesses my first years of college. So I started a landscaping company, a Chinese tutoring company. I started a real estate. My real estate people, I wholesaled actually 2 houses in college. I made $5,000 a piece. It was pretty cool. Assignment fees, etc. The whole thing. We did a Forex trading business. I did online marketing with Mason, and we did essential oils. The essential oil people in here, we were selling them online. doTERRA. Any business on YouTube. What's up? Any business on YouTube, we tried it. Okay? And finally, my dad looks at me like this. He's like, Bridger, I love your effort. I love your drive, but you're kind of like a chicken with your head cut off a little bit. And he goes, I think we can help you out a little bit. He goes, I want you to go meet with one of my business partners. This guy can really help you out. I said, okay, I'll go meet with whoever, right? Like, cool, I'm just a young hustling entrepreneur. I'll go meet with whoever is out there. So we set this meeting, and we go out, and let me go back one. I meet with this guy. So I go up. It's my dad's business partner. I drive to his house, and I pull up to this gorgeous, beautiful mansion. I'm like, man, who's my dad's business partner? This guy's pretty intense. And I walk, and I go knock on this big door, and he comes to the door, and sorry, the camera guys are all freaking out at me because I'm walking through here. They're all getting mad at me. There you go. I go knock on this big door, and he comes to the door, and thankfully, and I was worried like a butler was going to come and like, be gone, peasant, get out of here. It's this massive house. And he comes and he goes, Bridger, come in. And I walk in this gorgeous mansion. It's got white couches in the ceiling, and the wine cellar, and the basketball court in the basement, and pool, and just everything, cars in the garage. And I was like, wow, this guy's pretty legit. And so we sit down, we start to chat, and finally I ask him, how did you get all of this? How'd you do this? And he goes, Bridger, what's funny enough, a lot of people don't ask me that question. And I was like, oh, shoot, that's the only question I had. Sorry, I don't have any other questions. I had one question. It was, how do you do this? And he said, no, Bridger, you're fine. But he goes, it's funny, not a lot of people ask me that question. Because I'll tell you, he goes, when I was in my 20s, I was a lot like you. I started a bunch of business. I had kind of some success. But then he goes, then I figured out the secrets of the wealthy. He goes, the wealthy families of the world, they get their kids into college. Sometimes they cheat. We've seen that, right? They cheat to get their kids into college, but they go get into college. They want their kids to work in Wall Street and ease their way up, and they want them to work in the fund space, private equity, hedge funds, venture capital, real estate funds, or come back home and run the family office. And I was like, wow. And he goes, I met the guy that ran a private equity fund. He was one of the wealthiest people I'd ever met. And he goes, I decided I was going to be that. I was going to start a fund. And so he goes, that's what we did. We started a real estate fund. And at the time, he goes, we're managing, I'll come back here to the stage, you guys can see me. He goes, we're managing $8 billion of real estate at the time. I was like, wow, that's a lot. To put that in perspective, you guys know Grant Cardone? Anybody know Grant Cardone? Cardone Capital, actually, Ryan Secco is going to be speaking in just a little bit, which is pretty cool. He's coming from Cardone Capital. It's awesome. Cardone Capital today, I think, is about $4 billion. So at the time, they were 2 times bigger than Cardone Capital, which is pretty impressive. That was years ago. I think today, they're over 10 times bigger than Cardone Capital, over $40 billion. So 10x Uncle G. What's up, Uncle G? Which is pretty crazy, okay? And I love Grant and all that stuff, but it's just wild how big, and they're doing real estate funds. And I was just totally enthralled. And I said, hey, can you be my mentor? I want you to coach me. Can you mentor me, et cetera? And he goes, Bridger, go talk to your dad. Your dad knows way more about this than I do. I said, no, my dad's, he drives a crappy car. We live in a small house. I want to learn from you. Like, and he goes, Bridger, sorry to break it to you, but me and your dad make about the same amount of money. And my chin dropped to the floor. I was like, huh? Come again? And I left the dude's house. I went straight to my dad, since my dad's right here. I was like, Dad, what the heck? Like, why haven't I been able to order a soda at Chipotle for the past 10 years? Because it's too expensive. Like, what is this? What's going on? And it wasn't that dramatic, but I like to make it dramatic. Because Bridger, he goes, we're doing pretty well. He goes, I like to save and invest my money. My partner kind of likes to spend his money. But yeah, we run these big funds. And long story short, every Sunday night, I'd go to my dad's house, and we'd sit down and we'd go on the whiteboard. He'd teach me about funds. We taught me about limited partnerships, general partners, how to launch a fund, etc. And I finally got to the point where I wanted to launch a fund. And so I was like, I'm going to do this. And it's funny, a funny thing in life, when you start to learn about something, you start to recognize that thing in your life. You know what I mean? You ever done that? You ever bought a new car before? All of a sudden, you start seeing that car driving around everywhere, right? So I thought, man, I'm going to do a fund, and I want to do this. So I was in college. I was working an internship at the time and a job, and in college. And I was at the job I was working at. I saw an opportunity where we could start a fund for that company. They actually needed financing for some of their clients. It's a debt fund. I was like, hey, we could finance them. We could do a little debt, like a little loan program, et cetera, for them. Would that work? And the owners of the business loved it. I went to my dad. We sat down. We mapped the whole thing out. I was like, could this work, And so we put this all together. I was so excited. We got our little fund framed out. Here's Michael Scott. We were really excited. It's me and my dad framing everything out. This is going to work, And I hit this wall. It's like, crap. Now I got to raise money. Like, shoot. But then I thought, aha, my dad, super rich, apparently. I'll just go pitch my dad. It'll be awesome, right? And so I was like, easy money, let's go. So I went and talked to my dad, and sat down with him. He went to his office. I remember it was Sunday night, and I said, Dad, how would you like to be our first investor into our fund? Had my little pitch and everything. And he'd actually helped me a ton. He'd helped me a lot on my fund. It was awesome. It was a great mentor, great coach. And I said, Dad, how do you want to be our first investor in this fund? And my dad said, your first investor is your hardest investor to find. If I invest in your fund, it would ruin the experience of you raising money on your own. This will be a crutch that you'll never be able to recover from. He said, no, I'm not going to put money in. And it was a big, tough love moment for me. I was like, okay. He said, you got to go learn how to raise money on your own and do this on your own. So I left his little home office with my tail between my legs a little bit and walked out. And I said, I'm going to do this. And we went out. I hit the streets. I talked to everybody I knew, former bosses, college professors, friends from high school. I mean, like everybody. And after weeks of pitching, we raised a whopping $49,700 from like 6 different investors, which, by the way, was a lot for me. I know it's not a lot for you guys, but it was a lot for me at the time. You clap that up. That was pretty good. We thought it was pretty good. And good enough, it was actually enough to get started. That was like enough we needed. We were doing these small micro loans. They were like $2,000 to $3,000 a loan. Short term, they were like a month. Our first group of investors, we got them a 64% return on their money. Okay, so good return, small amount of money though, but good return percentage, right? And they were super happy. We then launched our second fund. We raised and deployed millions of dollars in that second fund. We ran that for, I think, 3.5 years. And then a year and a half ago, I actually had a competitor come in and buy our whole fund. We exited our entire fund, which was awesome. And by the way, in just a minute, we have Eddie Wilson coming out. He's going to talk about buying and selling funds. He's bought and sold hundreds of millions of dollars in funds, which can be, I'm just so excited to hear him speak. We did that, which is pretty cool. Then since then, we launched our third fund, which is Ugly Unicorn, which we've done very well. And then that second fund, we did 200 plus deals in there, deployed millions of dollars, which is pretty awesome. And today, actually, this is our performance from Ugly Unicorn as of our last reporting date, which is pretty cool. Net rate of return of 14.71, and then year to date, 39.61% on our Ugly Unicorn fund. Can you clap it up for that? It's been pretty cool. We managed about 13 million in that fund. We just started it, and we're growing like crazy. It's really fun. So it's been a blast to be in this space. And we'll talk about that in just a few minutes. But I've been able to spend amazing time with my family. I've loved this game and being in business. And by the way, update on me, a few things. I actually went, I don't know if you guys saw a post. I actually went and rang the NASDAQ bell a few weeks ago, which was pretty cool. So I got invited out. It wasn't my company, just disclaimer. It was another group. They just invited me out to be a guest there, but it was pretty cool. So this is us at the NASDAQ and New York Stock Exchange, okay, which is kind of cool. This is the only picture that I got back from the ringing of the bell. And if you zoom in, that's me. My mouth is open. Why do you, I get if you blink, I understand that, but who, when you're taking a picture, goes like this? But that's the picture I have. So there you go. That's my picture at the NASDAQ, which is pretty cool in New York, etc. This is my beautiful wife and son, Jonah. He's now 18 months old. We might have him come out tomorrow so you guys can say hi to Jonah. She's amazing. This is our beautiful family, etc. And then we've been able to donate to charities we love. We've had this amazing life. We've been able to travel and have this all sorts of stuff because I learned this game of funds, because I learned what we're talking about here. And we're still on this journey. I'm playing the long-term game. I'm going to play the 30, 40-year game. I don't want to get rich quick. I want to get rich in the long term and get really rich in the long term. If you're with me, give me an amen to that, okay? So this next segment I want to dive into. You guys still with me? Is everyone okay? You got energy good? Okay. I want to go quick through here, but I want to talk about launching a fund and actually the process of doing it. And again, you guys came to Fund Launch Live. Just so you're aware, I go to a lot of conferences and events, and they pump you up, and which is cool. But like, give me some juice. Give me some meat. You know what I mean? Give me something I can use. So all the speakers actually have asked them to give you golden nugget sessions. I want to dive into that. Does that sound good? There's going to be some pumping up and stuff like that, but we'll dive in. Okay, so we're going to dive in. So if you've been struggling on this game and this process, this is probably why. A lot of us are well, right here. It's not. I just want to let you know it's not your fault. You haven't had the right vehicle, or maybe you have the right vehicle of a fund, but you don't have the right training to operate that vehicle. Okay? So I want to walk through the training of how to launch this. So I want to talk about a new way, a better way to launch funds. We call this the fund launch formula. Okay, it's a framework we've built out to launching funds. I've had an incredible amount of amazing people sit down across me, and I've been able to interview them on my show, $100 million, billion-dollar fund managers. And what's interesting, I started to interview them on how they launched their fund, and all of them had a very similar story. They used the same process. And I was like, this is interesting. I interviewed another guy. I kind of asked him questions on this process, and it was the same process. I was like, this is interesting. And so we finally coined the phrase, let's just call it the fund launch formula. If you go Google how to launch a fund, it's terrible advice. It's terrible advice. And it's from some blog writer that had to write a blog for their quota on funds, and they went and Googled some stuff, and it's completely terrible information. So finally said, we got to rewrite how to launch funds, how entrepreneurs, how Wall Street rebels launch funds. Okay, so this is a 4-step process to launch a fund. We're going to dive in. Yeah? Sound good? If you're with me, say yes. Okay, let's dive in. So what we used to have to do, what a blog writer will tell you, is go hire a lawyer. If you want to launch a fund, go hire a lawyer, pay $30,000 to $50,000 for a lawyer, then go pitch investors, then hopefully raise money. And if no one likes it, go back to the drawing board and start over. And you're out $50,000 and good luck. A lot of funds, most funds never launch, by the way. Most funds never launch because they do this. They spend 50, and then you're already out 50 grand on docs, and you got to re-spend another 50 grand, and you're like, I don't want to do this anymore. And most funds never actually launch because they go this old, dumb, stupid way that blog writers put on Instagram or whatever, okay? So this is the way we beat out the Harvard grads, the people on Wall Street, etc. Now, myself, back to my dad, I was like, well, Dad, no one's going to invest in me. No one, I don't have a track record. No one's going to believe me. I'm too young. I'm inexperienced, etc. Like, who's going to invest in me? And my dad gave me this great example. He said, Bridger, I want you to imagine, right now, we found this Lamborghini Aventador in Billings, Montana, okay? This car is about a $300,000 car. All right, I think I put it on here. We'll put a little bit lower. Yeah, $300,000 car. And this person selling this is going in, they're going into bankruptcy, etc. They just need money like this. They need money by Saturday. And they're willing to sell the car for $50,000. Now just go with me as an example, okay? They're willing to sell the car for $50,000 cash Saturday morning, and you could turn around on Monday and sell it for $300,000, okay? Sound good? You guys getting the scenario? He goes, Bridger, imagine we have this deal. You got a phone call right now, and it's verified. We've had people look at it. It's all checked out. All you need to do is come up with 50 grand by Saturday. Could you do it? You can't use any of your own money. Could you find $50,000 by Saturday morning? In this room, who feels like they could find $50,000 by Saturday morning? It's all checked out. It's deal. Okay? And I was sitting there. I was like, you know what? I don't have an experience, but I have a pretty good deal. I would stay up late. I'd call whoever. I would knock on doors. I'm going to make $250,000 this weekend in college. Dang straight, I'm finding 50 grand. Like, I'll run through a brick wall for $250,000. And maybe we'll split it 50-50. Maybe I'll make 100 grand. Cool. 100 grand in a weekend? Like, I'm in. I'll call, I'll knock doors, I'll go find, I'm going to grandma's house, I'm going to my neighbor's grandma's house, I don't care who it is, I'm going to go talk to him, yeah? If you're with me, say yes, okay? And I was like, you know what? I bet I could find it. He goes, Bridger, what about 100 grand? Could you find $100,000? I was like, yeah, I think you can do it. And he goes, that's interesting. 3 minutes ago, you were telling me you're too young, you're inexperienced, you don't have the track record, and all of a sudden you're telling me you could find $50,000 by Saturday. And I was like, it's interesting. And he goes, because when you have a deal that's so good, people look past. Now, it's still good to have credibility and tracker. It's still good to have all that. But when you have a really good deal like this and you just say, hey, look at the deal. Even cut me out. Just look at the deal. You find the hole in the deal. It's a pretty good deal. You can find a lot of capital. And this is how, my dad's like, this is how we raised our first fund. We led with deals. So for example, here's a real estate property, pre-foreclosure, okay? So I want to put it in a different example, not Lamborghinis, but a property. Pre-foreclosure, mortgage is $1,250 a month. This guy is behind on his mortgage. Doesn't want to move out, doesn't want to go bankrupt. Really doesn't want to go bankrupt, just for pride's sake, okay? So there's $300,000 of debt on the house. If you rehabbed it, 100 grand, ARV, let's just call it $600,000. So after rehab value, you could sell this property for $600,000 if you put 100 grand into it rehab. Pre-foreclosure offer, let's say we give this guy an offer at $350, okay? So, hey, we'll give you, I know you got more equity than that. You could probably, maybe he's got $200,000 equity. Hey, you're not going to go bankrupt. We'll still give you 50 grand of equity after we pay out debt. You want to take this offer? Now, some may say no, but let's just say this guy says yes. And there's actually, I did a whole study about 20% of pre-foreclosure people will take a deal like this. 80% won't, but 20% will because they do not want to be foreclosed on. And they actually can even rent the house back from you even once you're done. So if we did 350 plus 100K of rehab minus 600, you net 150 grand. My real estate people, you guys know deals like this you see deals like this all the time. And what do you do when you pitch investors? Hey, I may not have the greatest I'm not some Wall Street sharp, whatever, but just look at the deal. How do we lose money? If we buy this property for 350, how do we lose money? Right? All of a sudden, if you're in this room like, I don't have a track record, I don't have the XYZ thing I need, lead with the deal. And that's what my dad taught me. So step one of the fund launch formula is find an amazing deal. If you're with me, say find an amazing deal. Okay, that's step number one of the fund launch formula. So lead with a great deal. Now, a lot of people, okay, I'm walking through the 4 steps to launch a fund. Okay, Bridger, I found a great deal. Okay, I want to go, they always think, okay, I'm going to go to, now I need to do legal. And it's like, hold on, before you do legal, we got a few other steps in process. Now, a few other examples of great deals. I want to just give you guys more examples, okay? There are many inefficiencies across markets that money and strategy can solve. I'm going to say it one more time. There's many inefficiencies in markets that money and strategy can solve. So for example, venture capital. What's a market inefficiency that you're solving with venture capital? There are startup founders that have a great idea of minimal viable product, and they need capital to hire and grow and get that product to market. Ta-da! A venture capital fund can come in and fill that market inefficiency, and you have a great deal. Does that kind of make sense? Another example, private money lending. Anybody do private money lending, hard money lending, etc.? My dad's actually first fund was private money lending. Probably talk about it tonight a little bit. Over leverage, someone typically right now in today's market, we're seeing this more and more. You need money to float for the next, let's call it 6 months, okay? You take collateral, real estate on the loan, so you collateralize the loan. So let's say you have a house, it's $1 million. Hey, I'll give you a loan of $500,000. If you don't pay back, I'll take the house. It's $1 million. So it's a win-win. Either they pay me back $500,000 plus my interest payment, or they don't pay me back and I get the $1 million house. Right? Win-win. Does that kind of make sense? If you're with me, say yes. Okay. Real estate construction, again, inefficiencies in market. What they're essentially solving is there's a housing shortage. Certain people in the area want a lot of jobs, and you build more units in that area to fill a market inefficiency that capital can solve. Does that kind of make sense? Clothing brands. Anybody run a clothing brand in here? I have a bunch of friends that run major clothing brands. They keep having this chicken and the egg problem. They need sales to buy inventory, and they need inventory to buy sales. There's inefficiency there, and they try to get bigger. And I have a friend, he runs, I think it's 15 million a year, and he's like, we're still having this problem. We need more money to buy inventory, to get more sales, to get more inventory, to get more sales, and there's just this circle. So what you can do is come to inventory financing. It fills a gap in that market. Does that kind of make sense? You fill these inventory. We have people on Black Card buying shipping containers, moving them around the world. It's pretty cool, okay? This is the concept of arbitrage, okay? So the definition of, if you've heard of arbitrage, the definition of arbitrage is buying one thing in one market and selling it for a different price in a different market. It's the whole definition of arbitrage. Most of us make a lot of money off of arbitrage in a lot of ways. So for instance, water in the middle of the desert, how much would you pay for a water in the middle of the desert? $10, $20, $50? How much is water worth in Costco? Maybe $1, $2. So if you can take water from one market, Costco, it's $1, and take it to a different market, like the middle of the desert or an airplane, you can sell it for a different price, and you have an arbitrage between those two prices. Does that make sense? Definition of arbitrage. So a great example, my traders in the group, long-term capital management. It's a big fund on Wall Street in the 90s. They did this. Their whole strategy was around, they found an arbitrage play between the 29.75-year treasury and the 30-year treasury. They found that the 30-year treasury was overbought because it was, everyone knows the 30-year. Very few people know the 29.75-year. Who's heard of that, right? So what they did, this is before, kind of pre all the new systems and stuff, they found that the 30-year treasury was overbought and the 29.75-year was underbought. And all they did was just play that little arbitrage. There's other groups that have done this with Bitcoin. They sell it in some countries versus other countries. There are different prices between exchanges. One exchange says the price of Bitcoin is this. Other exchanges say the price of Bitcoin is this. So what they do is just buy it on one exchange and sell it on another exchange. Does that kind of make sense? Arbitrage play. This actually happens in funds today, is arbitrage play. Is that kind of making sense? If you're with me, say yes. All right. Another one is economies of scale. We talked about this earlier. Economies of scale are many products, right here, many companies would be successful at economies of scale, but don't have capital to hit that point. To produce one iPhone costs, let's just call it $400 million to produce one iPhone, to get the tech and the engineers and everything. How much does it cost to produce the second iPhone on average? Maybe at $200 million. And the third iPhone, it's like $100 million a piece. And the fifth iPhone, it's like $30 million a piece. And then it gets all, once you produce 1 million iPhones, the average cost to produce each iPhone is maybe $500. It's called economies of scale, right? To produce the first one's very expensive, but as you copy and paste that model, you can have what they call economies of scale. There are many companies out there waiting and hoping for someone in this room to start a fund to help get them to economies of scale. Does that kind of make sense? They need that capital injection to get there. This is what we call asymmetrical risk for your fund. So you're trying to find asymmetrical risk. Asymmetrical risk means, we've all heard high risk, high reward, right? Asymmetrical risk or low risk, low reward. Asymmetrical risk means low risk with relatively high reward. That's that gap is called asymmetrical risk. That's what we thrive on. Sound good? So that's number one, find amazing deal, okay? Is that kind of making sense? You guys with me so far? So Bridger, okay, I'm ready for legal. Okay, I want to do legal docs. Hold on, that's number 4. Once you have this great idea for your fund, again, 4-step formula for fund launch, go out and frame the deal. We'll talk about this more tonight, but you go frame the deal, the pref, the catch-up carry, just how the whole deal is put together, how you investors get paid back, structure, offering deal, etc. Then, before you go do all this other stuff, go and raise capital. So number 3, go actually and pitch investors. Go actually start floating this around investors. See if they're interested in this potential deal. Again, before you spend all the money. So now, how am I going to raise money without legal docs, Bridger? Go and soft float this to investors. Go find mentors, people in your life. Hey, would you invest in this deal? If we actually paid for legal docs, did everything, would you actually invest in this? What you do is you build what I call soft commitments or verbal commitments into a deal before you go build it, okay, with the legal docs. Now, but Bridger, who's going to give me the money? I love this quote from Warren Buffett. He says, when I was young, I had a lot of ideas and not a lot of money. And now that I'm old, the roles have reversed, and I like investing in people with great ideas, but just need money. Take a wild guess. What's the average net worth of a baby boomer right now? Anybody? Shout it out. 2 million, what'd you say? 1.5, etc. I was actually spot on. The average net worth is 1.175. Isn't that kind of crazy? I did not expect that when I looked this up. The average baby, not like the high end, whatever, the average, the middle is 1.175. There are a lot of baby boomers or people that are older generation right here. $84 trillion they control, and a lot of them are just like Warren Buffett. I want to invest into people and younger people that have ideas, funds, etc. that can just put my capital to work, okay? So next time you see a boomer, be nice, okay? All right? Be nice to them because they've got a lot of money they're going to send your way, all right? So again, get soft commitments from investors, and then and only then, go and finish your legal docs. LPA, hire my brother, come out, and he can do all the legal docs, or firms like his to come and do our docs. Huge 100-page documents. Typically, just so you're aware, they're about, anyways, this is just from websites, $50,000 to maybe even $300,000 for docs. Now, you can reimburse those, though, back from your fund, okay? So that was a pretty quick version, but the best way to launch a fund is through the fund launch formula. Does that kind of make sense? 4 steps? Is that pretty good? You can clap it up for the fund launch formula. Not bad. Now, Bridger, I'm just going to say this. I'm not smart enough to do this. We're not, might be feeling, I'm not smart enough. I can't do this. This is too complex. Again, if these 3 individuals can do what they do, we can do everything. Yeah? Can I get an amen? All right. So I want to emphasize this, and then we'll wrap up. We got our next speaker coming on. It's not the how, it's the who. So I know there's a lot of people in here, man, I don't know how to flip a house. I don't know how to trade. I don't know how to do a fund, etc. That's okay. Very few funds, almost 0 funds, are run by one person. There's actually 3 distinct categories of people in a fund. You have your expert investor, your fund manager, and your money raiser. Expert investor is the person that's maybe really good at, like in my fund, for example, I'm not good at crypto. I don't know anything about crypto. My business partner, though, is a geek on crypto. He's amazing at crypto. I'm very good at fund management, running a fund, how to build an SEC structure, etc. And both of us help raise money together. Does that kind of make sense? So that's kind of how they mix together. So at this conference, look around for people that can fit one of these categories. You don't need to be the expert on all of them. Just be really good at one of them. Hey, maybe I'm really good at raising capital. I'm really good at networking, meeting people. I'm really good at maybe trading options. Maybe I'm really good at fund management, etc. And find people you can connect with and partner with. Does that sound good? If you're with me, say yes. Okay, build those amazing teams. So again, the best way to launch a fund is through the fund launch formula. Now, when I first started going to events, I was skeptical. I go to events and I was like, I don't know about the speaker, the stuff on stage, etc. And I would always sit in the back and kind of like, whatever, push it away. And I want to invite you for these next 3 days to put your ego aside and go all in. And have in the back of your brain, maybe there's a chance that what that person's saying on stage has something to it. Maybe there's a chance someone's saying on stage, maybe they've been through something before that I haven't been through and I can learn from them. So I'm going to ask this group, especially in the finance community, et cetera, we love to be like the skeptic and like, I know better, et cetera. I'm going to ask you to put your egos aside a little bit and buy in and just go with the speaker, whoever's up here. Just like, I'll just go with you. I'm going to take notes. I'm just going to go with you for a little bit. Does that sound fair? I love this book. Let me read this book. It's called The Go-Giver. Short little book. Oh, a bunch of people. Okay. This book talks about the concept of being a go-giver. Meaning, some people, which is great, they give money at the end of the year. They have a big check. They write like a huge check out to a charity, etc. This book talks about the concept of having little giveaways your whole life. Be always ready to give money or share or something to other people. And actually, me and my wife started doing this. It was the funnest thing we ever spent our money on. We'd put $50 or $100 bills in our pocket and just always have them on us. So if we were at the grocery store or wherever and we saw someone that needed their groceries paid for them, you just, bam, hey, here you go, I got your groceries, no worries. That's a really fun way to spend money. And it's all from this book. It talks about the concept of go-giving and being always ready to give. And I personally, I don't love to give to people that are begging. I mean, I kind of do, but I really love to give to people that are working. Like the cashier working at Smith's. That's my favorite part. Like, people that are like, have kids at home, are trying to work, like doing all this kind of stuff. Additionally, you don't have to just give money. I'm going to invite you at this conference to be a go-giver to the people around you. Give them contacts, your network, your smile, your engagement. Be a go-giver. Be someone that goes out and actively is thinking about how to serve the people around you. What will happen is you're going to find they're going to serve you back 10 times more and you'll get way more than you ever put in. Get in the habit of, I love this quote, get in the habit of go-giving. Yeah? I'm going to invite you to get in the habit of go-giving. And the reason I love this because it's by me. This is my quote. Okay? Just kidding. But get in the habit of go-giving, all right? So during this conference today, give to the people around you. Talk to them. Meet them. Don't go to lunch alone. Don't go to dinner alone. Grab someone new. Hey, let's go to dinner together. Let's go to lunch together. We're going to give you guys breaks and times to go network. You have plenty of time to network. Don't be stressed out about it. We have plenty of stuff planned for you to network and meet people. Be a go-giver. Y'all are amazing. My name is Bridger Pennington. Thank you guys so much. Y'all are amazing. Thank you.